Welcome to this deep dive. We break down complex topics so you can really get the essentials fast and, well, completely.
Get up to speed quickly.
Exactly. Today, we're looking ahead, exploring the future of digital money and, potential shifts in global economic power.
It's a big one.
It really is. The central question we're tackling is, when might Bitcoin stop being primarily valued in US dollars? It sounds complicated, I know.
A little daunting, perhaps.
Yeah, but don't worry. We've gone through a detailed analysis looking at Bitcoin's reliance on the dollar, the history behind the dollar's dominance, and different future scenarios for Bitcoin maybe breaking free.
So we've done the homework for you.
We have. Our goal today is just to pull out the most critical ideas from that material, giving you a shortcut to understanding this without getting bogged down in all the details.
And it's fascinating because that current dependency is really the starting point. To even think about when Bitcoin might decouple, we first need to grasp why the dollar holds such a central place in the world economy today.
Exactly. Okay, so let's unpack that. The analysis takes us right back to the Bretton Woods Agreement in 1944.
Right after World War II.
Yeah, picture the scene. The world's coming out of the war. The Allied powers get together to design this new international monetary system.
And the dollar emerges as the global reserve currency.
Initially backed by gold. But then later, 1971, the U.S. moves away from the gold standard. So what kept the dollar on top after that?
Well, several things were key. The sheer size and strength of the U.S. economy, for one.
Okay.
Then there's its relative political stability, and importantly, the depth and sophistication of its financial markets.
Right, the infrastructure was already there.
Precisely. And to give you a sense of its importance now, something like 88% of all foreign exchange transactions involve the dollar. That's according to 2022 data from the Bank for International Settlements.
Wow, 88%. That's huge.
Really shows the dollar's grip on global trade and finance.
And it's not just currency trading, is it? Major commodities, think oil, gold, wheat, they're mostly priced in dollars too.
That's the standard.
So it makes sense then that Bitcoin, like pretty much any other asset trying to fit into existing global markets, would initially be valued in dollars. It just makes it easier to understand and trade.
It's the benchmark everyone knows, the global
Right.
measuring stick, really.
Right. But Bitcoin, from its inception back in 2008 by Satoshi Nakamoto as this peer-to-peer electronic cash system, it always had this vision of independence, didn't it?
It did. And that vision, that idea, it gained traction, especially after the 2008 financial crisis, and then again during the COVID-19 pandemic. You see analysts like Saifedean Ammous point this out.
Okay.
The concept of an alternative, decentralized store of value. It really struck a chord with people during those times of financial uncertainty.
That makes sense. But this is where it gets really interesting, right? Because moving from being just a store of value, like digital gold, to becoming a true unit of account, something we actually price everyday things in, that presents some pretty big challenges for Bitcoin.
It certainly does. The main hurdle right now, undeniably, is its price volatility.
It's wild sometimes.
It really is. We're talking fluctuations that can often exceed 50% in a single year. There was a study by Yermak back in 2015 highlighting this. Imagine trying to buy your groceries or a coffee when the price in Bitcoin could change so drastically overnight.
Yeah, not practical.
That unpredictability just doesn't work well for daily transactions or long-term economic planning. A unit of account needs stability, fundamentally, to make trade and accounting easy.
Absolutely. And while we've seen some interesting examples of adoption, like in El Salvador,
Sure, specific cases.
a widespread use of Bitcoin for everyday payments, it's still pretty limited. And then there's the whole tech complexity aspect.
Definitely a barrier. Managing private keys, digital wallets, transaction fees.
Yeah.
For someone who isn't tech savvy, it can feel quite intimidating to get started.
It's not like just tapping a card.
Not yet, anyway. So all these complexities, at least in the short term, they reinforce the need to measure Bitcoin's value against something more stable and familiar, like the dollar.
Okay, so that's the current situation. But the analysis we looked at suggests things could change. What are those potential paths towards what they call Bitcoin's de-dollarization?
Right, the potential pathways. Well, there are a few scenarios. One major one involves a significant erosion of trust in the dollar itself.
How might that happen?
Think about major dollar depreciation, maybe due to runaway inflation, unsustainable government debt levels, or even significant political instability in the U.S. That kind of situation could push people and markets towards decentralized alternatives.
Like Bitcoin.
Exactly. And we're already seeing, some de-dollarization talk and movements in certain economic blocs, like BRICS plus TWINA. They're exploring more bilateral trade, using their own local currencies, trying to bypass the dollar system. Oliver Stunkel writes about this.
Interesting. So if the main reference currency starts to look shaky.
People naturally look for other options to hold value and make transactions. It makes sense.
Okay, so that's one path, dollar weakness. What's the second potential route for Bitcoin to gain independence?
The second path is Bitcoin itself gaining much wider acceptance as a unit of account. Analysts like Amos argue that Bitcoin's built-in scarcity, that programmed limit, and its political neutrality could make it a future value reference, especially in the digital economy.
But that's a big if, right? What needs to happen for that?
Several crucial things. First, much greater long-term price stability than we see now. That's non-negotiable.
Got it. Stability first.
Second, you need a scalable and efficient payment infrastructure. Things that the Lightning Network are aiming for this fast, low-cost transactions.
Making it usable day to day.
Exactly. And third, critically, widespread adoption by both merchants and consumers. It's not enough for the dollar to weaken. Bitcoin also has to prove itself as a practical, reliable alternative.
So it's a two-sided coin, so to speak. Dollar potentially weakening, Bitcoin needing to strengthen its own case. What about the third path mentioned?
The third path involves the rise of what you might call Bitcoinized economies.
Bitcoinized economies.
Yeah, the example often used is Bitcoin Beach in El Salvador. It's a community where goods and services are priced directly in Satoshis, the smallest unit of Bitcoin.
So they bypass fiat currency altogether.
Essentially, yes, within that local context. Now, these are mostly isolated cases right now, but the idea is they could become more common, especially in places facing hyperinflation or severe monetary instability.
Fascinating to think about that happening at a community level. Now, the analysis also laid out a kind of tentative timeline, didn't it? We should stress this is very much an estimation full of uncertainty.
Absolutely. Highly speculative, but useful for visualizing potential stages. The first stage, roughly spanning 2020 to 2030, is seen as Bitcoin consolidating its role as digital gold.
Primarily a store of value, protecting capital long term.
Exactly. Then the next decade, maybe 2030 to 2040, could see an expansion of Bitcoin use in actual payments.
Driven by those tech improvements, like Lightning Network, making transactions faster and cheaper.
That's the idea, making it more practical for everyday commerce.
Okay, what's next in this hypothetical timeline?
The period from 2040 to 2050 envisages the development of Bitcoin-based circular economies. This is where communities, maybe even some countries, might start adopting Bitcoin as their primary measure for pricing goods and services internally.
Moving beyond just payments to actual pricing.
Yes, becoming the unit of account within specific economic ecosystems. And finally, the stage from roughly 2050 to 2070. This is where we might see a gradual, broader de-dollarization of Bitcoin pricing.
Where it starts to stand on its own as a unit of account in larger parts of the global economy.
Potentially, yes. But again, it's a very long-term outlook, highlighting just how significant a shift this would be.
Decades away, potentially.
And it's crucial to stress this transition isn't guaranteed at all. It depends on a really complex interplay of factors.
Right.
It needs both the Bitcoin ecosystem itself to mature, significantly solving those volatility and usability issues, and major shifts in the global financial system. That could include, as we discussed, a potential decline in the dollar's dominance.
Okay, so summing up, it's not like flipping a switch. It's a complex, long-term process. And it hinges on two main things. Bitcoin's own internal evolution.
Getting its house in order, so to speak.
And these bigger transformations in the global financial landscape, including that potential weakening of the dollar's grip.
Precisely. And for a global de-dollarization of Bitcoin pricing to happen, you'd need several key elements to align.
Let's recap those quickly.
Okay. A drastic, sustained reduction in its volatility. Mass adoption as both a reliable store of value and a practical means of payment.
The tech has to work smoothly, too.
Absolutely. A robust, accessible, low-cost payment infrastructure, and possibly some external shocks or events that really shake confidence in traditional fiat currencies.
So it seems plausible, looking really far ahead, that the second half of the 21st century could see a world where Bitcoin is valued independently of the dollar.
A world shaped by technology, maybe crises of trust in traditional money, and this ongoing search for greater monetary sovereignty by people and even nations.
Which leaves us, and you listening, with a pretty fundamental question to think about, doesn't it?
It does. Our global societies, are people everywhere ultimately willing to embrace a truly decentralized monetary system? one that's fundamentally free from state control.
It goes way beyond just the tech.
It really touches on core ideas about trust, power, and what we want our economic future to look like, something
Right.
to definitely keep mulling over.